everyone, I'm Fatema Pirone, Vice President of Enterprise Digital at CIBC, and I'm joining you today from CIBC Square, our new state-of-the-art office space. You might have seen, heard, and felt the hype around CIBC Square via LinkedIn over the past few months. CIBC Square is a reflection of thoughtful dedication to the place of Toronto, health, wellness, and smart technology. The first concept I wanted to discuss is the hype as disruptive accelerator. The ability for technology to be disruptive is closely related to the number of people who are using it or even talking about it. Many new technologies or ideas that may offer significant value fail to gain traction because not enough people are exposed to them in a way that helps them understand how this new technology could help them. Hype can increase the disruptive potential of a technology by exposing it to a large group of people that may otherwise never have heard of it. And while many people lose interest as the hype settles and they go back to their normal routines and behaviors, the people who stand to gain the most from the new technology are more likely to continue using it and developing it, potentially contributing to a momentum needed to eventually mature the technology to a point where it is meaningful and valuable to a large enough population that it becomes meaningfully disruptive. While we think about the role of hype as a force of disruption, it can also be worthwhile to recognize that the value of technology is not necessarily related to how many people are using it, but rather how much value it offers to the people who do use it. It's important to note while technology is at its peak of its hype cycle, it can easily be dismissed or become irrelevant as a passing fad. But if we take the time to understand who this technology is valuable to and why it's valuable to the audience, it is possible we could become better at identifying technology we should be focusing our attention on and how they are maturing as well. A new technology that tries to solve a big problem for a small group of people may have more long-term disruptive potential than a technology that tries to reach everyone at once. Next up, we will look at some technologies that failed to gain traction for years before they were catapulted into a media spotlight. And after the spotlight, they've gained a new momentum of peak of hype, bringing them into a new stage of maturity with small group of people continue to support and show interest in them. We're also going to contrast this with the technology that has always offered tremendous intrinsic value to everyone in Canada, but hasn't had its momentum of hype, and how momentum has been relatively difficult to build despite the value it offers. Let's begin by looking at cryptocurrency. Bitcoin emerged as a currency in 2009, and it didn't gain traction as a payment mechanism or investment vehicle. New cryptocurrencies are continually being created with conceptual applications of this technology being adopted by the primary value as a speculative investment vehicle. A brief spike in market prices in 2018 captures media attention, but interest quickly dissipates with prices dropping quite quickly as well. Throughout this period, it is primarily a small group of people trading amongst themselves and the pool of participants not necessarily expanding. Although people are using it, doesn't essentially mean that it's creating value. With COVID-19 pandemic in 2020, conversations around life in digital environment increased. Cryptocurrency trading volumes and market prices began increasing almost immediately. The media takes notice in 2020 and participations of massive increase in both market value and significant volume of new people that are interested in cryptocurrency market. Many are driven from fear of missing out, and the market very rapidly comes to extraordinary heights in a short period of time, including my dad, who wondered if he should sell his house and buy Bitcoins, or my husband, who's a proud owner of a bunch of useless Dogecoins. With the market crash in May of 2021, some investors leave the market, but the trading volumes, they remain relatively high, and market starts to climb again. At the same time, global developers community is becoming more and more knowledgeable about cryptocurrencies, and more startups are emerging in aims to use this technology to usher in a new version of the internet. If you look at the graph on the slide, you will see that there's a spike in Google searches in 2017 and 2018, which aligns to when the media attention was given, and again in 2020 and 2021. You'll also notice that there is a sustained increase in Google searches in comparison to before 2017, as those interested and invested in crypto continue to have interest. Now, in terms of where crypto is heading, while the market is maturing to become more accessible to mainstream investors, there are signs that the tremendous boom and bust volatility of the past is slowly leveling as more people are entering the market. And the value of cryptocurrency as a disruptive force in the payment space remain low. However, we are beginning to see instances where the special attributes of cryptocurrencies, such as their global accessibility or instant settlement, make them uniquely valuable. For example, many organizations are becoming more open to accepting payment in cryptocurrency, offering a demonstration of the value of fully formed digital currency offers, which leads us to ask, is there other circumstances where global accessibility of digital currency could be uniquely valuable? This brings us to the next topic, which is Metaverse, a fully digital space where people from across the world congregate and socialize and transact. Metaverse started in 2003 with a Second Life on online virtual platform where users could customize realistic avatars, meet with other players, and exchange goods and services. This is also when we experienced the Web 2.0, which was centrally owned. Decisions were based on shareholder value and traditional payment methods such as credit and debit. In 2016, like everybody else, I was also interested in Pokemon Go, and it was trending globally. In 2017, we saw Fortnite introduce concepts like virtual concerts with popular artists. And in 2020 enters Decentraland, a community where governed virtual reality platform that runs on Ethereum network. We have experienced Web 3.0, which is a community governed where decisions are based on users' consensus and introductions of crypto wallets. And then you have in 2021, where Facebook now rebrands to Meta and announces plans for Metaverse, and later that same year, Decentraland's tokens spiked 400% overnight over Facebook's announcement, which was a big indication of hype. No industry has reached consensus on a final form of Metaverse. There are 4 different types of Metaverse being explored today, and we're trying to reach sort of that unanimous end state. The 4 types of Metaverse are augmented in reality, life logging, mirror worlds, virtual worlds, and the current internet is not designed for something like Metaverse. And the new technology is being created for Metaverse as we speak. The final stage of the Metaverse will combine all of this effort and much, much more. I would say this year, so 2022, the Metaverse is still a chaotic state that is being established and evolving as we speak. The entry of tech giants is just a starting point and preliminary exploration in the direction of the Metaverse as it carries out. However, the cost of risk of engaging early in developing hypotheses about the future business models to identify an ecosystem partner or collaborations are relatively low. The asymmetrical risk of being left behind is worth the incremental investment needed to get started. And it is a time and period of interest, of sustained interest, like we saw in my own household where an Oculus was intensely used for about a month and then now collects dust as an expensive table decoration. So there is a big concern with the Metaverse for real value application is the challenge of validating identity on digital platform, which leads me to the next technology, digital ID. So digital ID hasn't had a single moment of hype that catapults it into public consciousness, unlike cryptocurrency or the Metaverse, but it has extreme value. Identity is about who you are at the core, and we have not experienced a wide adoption quite yet. There have been various attempts in representing people digitally, which was proven to be a very long process of trial and error. In late 1990s, Microsoft attempted with Identity 1.0 with the goal of virtualizing user identity online by providing customers with the ability to log in to multiple sites under the same one username. Unfortunately, it missed the mark. In 2010 as well, Identity 2.0 arose with emergence of social networks that allow users to log in with existing websites using their social identities. Meantime, across Europe, we saw an accelerated adoption and implementation of digital ID in the financial service space, which was not yet adopted in Canada. But the Canadian banking industry got together as a collective and built a solution that was implemented in 2019 called Verified Me. So fast forward to today, there are important capabilities and value that we're seeing today with digital ID. COVID-19 created an unprecedented need for industries to provide clients and customers with digital and remote alternatives, accelerating the need for digital identity solutions across the industry. So we here at CIBC has already adopted digital identity verification solutions to onboard our clients remotely. At the same time, the capabilities extend beyond financial services in healthcare, in government, in business, and beyond. And digital ID is very much a foundational and a core capability for enabling other trends and technologies in a secure way, which include operating in, let's say, an open banking framework, to buying or selling crypto, and I think the list goes on and on and on. Although we have ways to go, we aim to have Verified Me as a national digital identity solution that empower our citizens to have a safe, secure, and transparent digital ID that would allow them to choose when they want to use it for a wide variety of digital use cases. It could include things like crossing the border, opening a bank account, or changing their name. Digital ID will act as an enabler of what we've talked about today and more, likely playing a role to provide a safe, secure, privacy control to user, allowing us to execute high-risk activities in a digital way. So why do we hear about the Metaverse, cryptocurrency so often, but rarely see the headline about digital identity, when today the Metaverse and the crypto serve value to a relatively small group of individuals, whereas digital ID arguably would provide value to most or almost everyone, everywhere. It is easily to dismiss all the ways digital ID could transform the human digital experience without having the moment of peak interest that thrusts this technology into the public eye, capturing the attention of those otherwise who would have ignored this technology and accelerate or drive momentum in the space. Hype is not a reflection of the value of the technology, but rather who the technology is valuable for. When we think about hype and disruption, it is important to recognize that these technologies don't always offer value to a lot of people, but rather offer value or a lot of value to some people. Let's look at solar power as an example. Solar power is a relative interest and important to some, but could be life-changing to off-grid communities. I'll leave you with this last thought. When evaluating the disruptive potential of emerging technologies, look through the lens of the people who will use the technology and explore why they believe in it. Thank you for having me today.